Welcome back. And in our top business story, expanding into the East European markets is a main priority for the Dubai Chamber of Commerce and Industry, according to His Excellency Abdul Rahman Saif Al Ghurair. And Poland is in focus due to its strategic location and open view to foreign direct investment. The Dubai Chamber of Commerce and Industry hosted the UAE-Poland Business Forum today and welcomed His Excellency Donald Tusk, the Prime Minister of the Republic of Poland. The Prime Minister lauded the strong bilateral partnership enjoyed by his country and also revealed that his country was ready to invest $200 billion into Poland during the next 10 years. Also in attendance was the Minister of Economy, His Excellency Sultan bin Saeed Al Mansouri, who pointed out the areas of investment in Poland, which included energy, industry and tourism, in addition to increased cooperation in innovation. Al Mansouri informed that the GDP of the UAE amounted to $270 billion, while the country's economic growth ranged between 3.5% and 4% in 2010 to 2011 and is expected to continue at the same rate this year. His Excellency Al Ghurair stated that in just 10 months, between January and October of 2011, Dubai's non-oil trade with Poland was valued at 1.8 billion dirhams. The wealth management sector in the region is growing rapidly as the MENA region grew 8.6% in 2010 and overall assets under management are forecast to grow to $6.7 trillion by 2015, helped by high oil prices according to experts. Capgemini and Merrill Lynch's World Wealth Report for 2010 showed that the number of wealthy individuals in the region rose by 10% to 400,000, with the size of their wealth jumping 12.5%. RBC Wealth Management, part of the Royal Bank of Canada, Canada's largest bank and one of the largest banks in the world by market capitalisation, held a press meeting today to announce its move to new offices in Dubai and its expansion plans. The world's sixth largest wealth manager is looking to expand its business in emerging markets from $20 billion to $50 billion by 2015. So what lies ahead for investors in 2012 and what are some of the key challenges for the region?
Well, one of the significant challenges is clearly what do we know about the client itself when we start a relationship, which has always been a sensitive issue. So we need to make certain that we understand very much all the details around the client's wealth, how he has become a successful person, and how he or she clearly, because predominantly the she factor is improving every day, as we're saying, the more and more successful women are coming to our bank. We're seeing a clear need to be fully understanding where the wealth has come from, how they've built that up, and what their aim is in the future. So that's a very, very big component. The other big component is that we live in environments in emerging markets which are volatile. We need to be realistic that the volatility will not go away, and that we actually adjust ourselves timely to certain events that can happen. What lies ahead for investors at the moment is unfortunately not much different from what we're seeing today. There is still a very large uncertainty around the US and the European markets, which will not go away during 2012 very likely. So investors are really conservative at the moment. They are looking at the more stable fixed income markets, holding significant portions in cash as well, and will wait for the right kind of opportunities. So we as an industry need to really focus on providing our clients with ideas around those potential new opportunities. And in the meantime, give them the right kind of advice to have a proper safeguard around their current investments.
Abu Dhabi's real estate sector is becoming more competitive as a large number of high-quality projects are being delivered across all sectors. With significant increases in supply, rents are expected to decrease further in line with future additions to supply in the capital. The latest report from Jones Lang LaSalle's Abu Dhabi Real Estate Overview for Q1 2012 reveals that office supply is scheduled to increase further this year, bringing the total office supply to 2.7 million square metres. Vacancy rates have increased to around 30% and are expected to increase further as new supply comes on stream. Demand continues to be from tenants looking to upgrade from their current space. Residential stock for the quarter increased by 2,800 units. The retail market remains steady in terms of both supply and performance in Q1 of this year, but an estimated 271,800 square metres of retail GLA could be delivered to the market by the end of 2012. Additionally, 2 hotels, Sofitel on the Corniche and Premier Inn at Capital Centre, opened in Q1 of this year, adding 500 rooms to Abu Dhabi's total hotel stock inventory. General Holding Corporation reported that the total assets of the company grew to 23.7 billion dirhams at the end of 2011, compared to 21.6 billion dirhams at the end of 2010. The growth represents a 30% increase in assets. And Dubai builder Arab Tech has announced that its unit has won a 222 million dirham construction contract from top shareholder Abar Investments to build a 229 apartment residential tower in Abu Dhabi. So let's now take a look at the stock indices across the GCC.